This just happened. $500 million in single-day spot BTC ETF inflows. When that headline dropped, prediction markets reacted instantly. The Yes contract on BTC crossing $100,000 by end of Q2 jumped 12% in under an hour. That is the edge. Crypto traders who know how to read and trade these probability markets got a signal before the price chart moved a tick. That is what we are building today. I am going to show you exactly how to place a yes or no order on PolymarketTrade, step by step, from zero. No prior experience required. No jargon left unexplained. By the end of this video, you will have placed your first on-chain forecast contract in a live crypto market. Let's get into it. Quick primer before we touch anything. A prediction market is not a price chart. It is a probability engine. Every market on PolymarketTrade asks one yes or no question. Something like, will BTC close above $90,000 by June 30th? Each yes contract is priced in cents, 0 to 100. If the price is 64 cents, the market is saying 64% probability of yes. Resolves yes. Each contract pays $1. Resolves no 0. Clean, binary, fully on-chain. No leverage. No liquidation risk. No hidden counterparty. Just a contract on a real-world outcome settling by Oracle. Crypto is one of the most active categories right now. BTC price calls, Ethereum staking decisions, Coinbase earnings probability, Binance regulatory risk, SEC approval timelines. Real forecasts from real capital. Now let's find one to trade. Go to PolymarketTrade and tap the crypto category. You will see a live feed, BTC price calls, Ethereum ETF decisions, SEC ruling probabilities, stablecoin depeg forecasts, miner hash rate predictions. Each card shows the market question, the current yes price in cents, and 24-hour volume. Volume matters. More volume means more traders on both sides, which means the probability price is more accurate and the spread between what you can buy and sell at is tighter. For this walkthrough, pick any active BTC or ETH market resolving in the next few weeks. Avoid very low volume markets for your first trade. Thin liquidity means wider spreads and more slippage. Find something with strong volume and a clear resolution condition. Tap the card to open the detail view. Open a market. You're now on the detail panel. At the top is the full resolution condition. Read it carefully. This is the exact rule the market settles by. No ambiguity. If it says BTC closing price on Coinbase above 90,000 on June 30th, that is what the Oracle checks. Nothing else. Below that you see the yes price and the NO price. These sum to roughly $1. Yes at 64 cents, NO at 36. The spread between them is what market makers earn for providing liquidity, similar to bid-ask on any exchange. Scroll down for the order book. That shows depth. How many contracts are available at each price level? Deep book means you can size in without moving the price. Thin book, use limit orders and be patient. Check the resolution date. Short-dated markets react hard to any new DeFi, ETF, or SEC headline. Now you're ready to pick your side. Here it is. The yes and no buttons. Yes means you are buying the forecast that the event happens. BTC hits the target, the ETF gets approved, the SEC passes the ruling. If you are right, each yes contract pays $1. No means you think it does not happen. Each no contract also pays $1 if the event fails. They are perfectly symmetric. You are not picking a direction on a price chart. You are pricing a probability. Before you click, be explicit about your thesis. Why yes? ETF inflows accelerating? On-chain accumulation above a key level? Stablecoin supply expanding? Why no? Regulatory headwind? Weak hash rate signal? Declining DeFi activity? State your reason. Conviction first, execution second. Once you have it, tap your side. Tap yes to follow along with the rest of this walkthrough. On the trade panel, you will see a toggle, market or limit. Here is the difference, and it matters in practice. Market order fills immediately at the best price in the live order book. Fast, certain. The small downside. On a thin book, you might fill 1 or 2 cents above the displayed price if the book moves during your order. Limit order lets you name your exact price. You enter 60 cents, your order sits in the book, and it only fills when a seller matches it at that level. If the market moves against you first, it may never fill. For your first trade, use market order. Simple, no waiting, guaranteed execution. Once you have placed a few and you understand how these crypto forecast markets move intraday, switch to limit orders to enter at better prices on dips. Right now, set your size. Enter your quantity. Let's use 50 yes contracts at 64 cents each, $32 total. If the market resolves yes, those 50 contracts pay $50. Profit, $18 on a $32 commitment. That is roughly a 56% return if you are right. If it resolves a no, you lose the 32. No more. There is no margin call. There is no liquidation. Your maximum loss is exactly what you put in, the cost on that screen. The cost estimate updates live as you type. The max button autofills to your full PUSD balance. Only tap that if you have already thought hard about position size relative to your portfolio. Do not commit everything to one market. Stare at that cost number. It is real capital leaving your wallet the moment you confirm. When it matches your plan, move to preview. Before MetaMask appears, you see the order preview. This is your final checkpoint. The screen shows your complete order, which side, how many contracts, price per contract, total cost, and estimated payout if the market resolves your way. Read every line on this screen. If the price looks off, the size is larger than intended, or the cost does not match your plan, tap back. Fix it. This screen costs you exactly $0. Nothing has been signed. Nothing has been submitted. The moment you tap place order, the wallet signing sequence begins. 2 prompts are coming from MetaMask. Do not close either one. I am going to tell you precisely what each one is asking you to sign and why it exists. Take a breath. Tap place order when you are ready. MetaMask pops up twice. Here is exactly what each one is. First, signature, authentication. This proves you own the wallet. No gas. Nothing goes on-chain. PolymarketTrade uses this signature to authorize your trading session for the next 24 hours. It is cryptographic identity verification, not a transaction. Read the message field. Sign it confidently. Second signature, your order. This is EIP 712 format. When MetaMask shows you the details screen, you will see structured fields, token ID, price, quantity, side, your wallet address, expiration timestamp. Everything is human readable. You can audit every field before you confirm. This is the actual trade instruction. Once signed, it is submitted to the Polymarket CLOB, the central limit order book, where it either fills immediately against a live counterparty or rests in the book as an active limit order. 2 signatures, 1 clean on-chain contract. That is the full flow. Order is in. You just placed your first yes or no contract on a live crypto prediction market. Go to My Activity to track it. Entry price, current market value, and unrealized P&L updating in real time. Now, before you close the tab, set your exit level. At what probability do you close for a profit? At what loss do you cut the position? Define that right now while you are thinking clearly, not when the market is moving against you. And explore. PolymarketTrade has deep crypto coverage, BTC dominance forecasts, Ethereum staking yield decisions, Coinbase earnings probability, Binance regulatory risk, SEC ruling timelines. Each one is a live on-chain probability contract. Links in the description for the next tutorial in this series. Drop your question in the comments. What part of this flow was least clear? I read every one.